My guest today recently sold the balance of his business, Creative Coffees, to famous brands. And when it came to haggling about the price, there was no contest. Former karate expert, former karate instructor, Brent Kairuz. Lovely to have you here, Brent.
Thank you, David.
How did you get from karate to coffee?
It's quite an interesting story. I started karate off at an early age, and then by the time I was just out of school, I started teaching more professionally. I had quite a number of karate clubs throughout the south of Johannesburg, and I said to myself,
was that because you were brought up in the south that you had to be an expert in karate?
Well, I decided it's better to be able to defend yourself, and and I'm very fortunate for that career. I must tell you that I took up. It helped me a long way in terms of my business in future. And one day I sat back and said, what's going to happen if you get hurt one day, and how you're going to support your family? So I decided to diversify into the food industry, thinking it would be easier, and gee, what a shock it was.
Difficult.
Very difficult.
Just
yeah.
Back to your karate career, I mean, did you do it, when I say professionally, what levels did you reach in terms of...
I got my third dan.
Third dan?
Yeah, third dan.
And can you get colours for it? I mean,
I got my provincial colours, as well as I got my national colours as a junior pro-ter. And I did represent South Africa on more than one occasion.
Oh, wonderful. Any injuries?
Plenty injuries, definitely. I think in that particular sport, at the time, if you don't get injuries, you're not doing it correctly.
I mean, it takes a lot of dedication.
Definitely. A lot of dedication, a lot of discipline, a lot of focus, and definitely those are the attributes that you need in business.
Are you still doing it?
Unfortunately not. Being in the food game, it's a 24/7 type industry, and it takes a lot of your time. And unfortunately, I had to make a choice, and I chose business at a point in my career.
Karate to food. You had no experience in food at all.
Absolutely.
You just went in there literally blind.
Correct. I went in there literally blind, and I think what happens in us continental backgrounds per se, because I come from a continental background, is that we think we know how to cook. So the obvious choice would be, if we want to change career, let's go into the food game. And I decided to go into the food industry. Absolutely no food experience whatsoever. I had no family members with food experience at all. And yes, stepped into the game. I remember telling the designer one thing when he designed the shop: it must look like a franchise.
What shop was this?
The first brand that I opened up was in the south of Johannesburg, and it was called Shawarma King.
Shawarma?
It was a shawarma.
Well, that's close to your origins. I mean, that's pretty much a Middle Eastern type food.
Very much.
Shawarma.
So. It was, but we had quite a large variety of product line that we put onto the menu. And, we were fortunate to grow from there. I mean, we had one store, and within 2 years, we'd grown to 5. But 3 of them were in captive market environments, and 2 of them were in retail shopping centers. And I think that's where I started to learn the difference between your captive market business and your fully fledged retail environment, and how you have to trade differently in both environments to be successful.
What's the difference between a captive and fully fledged retail?
Well,
how would you explain that?
I would explain a captive market where you basically have the monopoly of the environment in which you trade.
Oh, in other words,
it's
you're
a
the only
closed
restaurant.
environment. You're almost the only restaurant or the only food offering at the particular environment, which creates a certain level of pressure on you as an operator, as your consumer has nowhere else to go. And based on that, I mean, you have to have a special way of dealing with certain consumers, especially the industry and the focus that we went into was in healthcare. And, in that particular environment, consumers don't want to be there, they have to.
Oh, that's your second operation. We haven't gone from consumer, we're going into healthcare afterwards. But cooking shawarma, that's a talent. So who did you get in to help you? Here you're going to open up a shawarma place. You've never run a restaurant before.
Never.
And the food's got to be good.
Correct.
I mean, because if people come in and they don't like it first time, they don't come back.
100%.
They don't give you a second chance.
Well, look, I mean, coming from a Mediterranean background, we'd obviously been used to tasting certain shawarmas and what we were interested in at that particular point in time and how to make them. And, we looked around at the local competitive landscape, and, you steal a couple of ideas with your eyes, and we came up with our own recipes and opened a business. And from day one, I'm fortunate to say that it was pretty successful. But, I mean, now that you look back and you look at it, it was a great starting point in terms of learning.
So when did you get out of shawarmas?
Well, I was in that business for a 5-year period, and as I've said, I went into the university canteens, and I saw quite a big difference having university canteens, and that's where we had to grow our menu base, because we couldn't just be focused on one product line. And in the university canteen sector, with the shawarma business that I had, I decided to rather diversify into captive markets, but which would have a constant rotation of clientele. Because being in the university canteens, it was very limited in terms of the school holidays that the guys went on and study breaks. So I liked trading in that environment.
Which universities were you
I
in?
had the rights to Midrand University, Moore Park Business School, and the Damlin Braamfonteins at the time.
Okay. And you sold shawarmas there?
I sold shawarmas, but I also extended the menu and had a fully fledged food offering.
So that's captive. So when did you get out of that business?
Well, I decided, as I said, at that particular point to start focusing on captive market environments. And I was fortunate enough to know the managing director of a company called SSP. Now, they were owned by Compass, and I was on the phone one day to this particular gentleman, and he told me that he's getting out of the hospital coffee shop business. And, you know, I quickly said, well, that's exactly where I want to be. It's got a constant rotation of clientele. It is a great captive audience. And, you know, it's definitely ticking all boxes for me.
So as far back as that, so you started this concept, or you then decided to go into hospitals and run the coffee shops that you see there?
Correct. So what I decided to do at that particular point in time was go forward and see how you could get more business opportunities in those environments. So I picked up the telephone, phoned the different hospital managers and said, I've got a coffee shop business in captive markets, can I come and see you? And my timing was impeccable, because as they were getting notice from that particular operator, I was the person phoning them saying, I've got the solution. And I was fortunate enough to open up my first store.
Is it big enough? I mean,
it's a very niche market business. But I mean, to give you an example, we managed to open up 28 stores within a captive market healthcare environment.
At 28 different hospitals.
28 different hospitals.
And of course, I mean, you've got centralized buying, and you're able to manage all of them. But I wouldn't believe that because generally, you know, when one goes to a hospital, you might sit down waiting for someone to have a cup of coffee and maybe a sandwich. So it doesn't appear to be big ticket items. You're not going to have families coming there and doing that. And eating. If they are, it's pretty sad, you know, because someone's at hospital.
You know, it's funny that you say that. It is a very underestimated sector, but it is a high volume concentrated sector due to the fact that it's a great captive market. However, the most important part of that particular business is you need to be flexible to be able to sort and source out your service offer to your different consumers, and be flexible enough to be able to cater for the demographic in which you trade. And that's the trick to being in a healthcare environment.
I'm fascinated by your story, because it was big enough for Famous Brands.
But the company went into liquidation, a food business, and I heard about this particular food business going into what they call a public offering, where you would go through to put a bid down on a particular offer on a business, on a closed, if you want to call it, offeree environment. And when I arrived at that particular area, I noticed that there were two companies bidding for this particular trademark, and it was myself and Famous Brands. And you know, and you can almost imagine it's David versus Goliath. Yeah. So I mean, I'm coming there and I'm busy trying to bid on this trademark, and you know, it's a closed bid, so you had to put your offer in an envelope, and then they would open it up, and the highest offer would win. And we tied with Famous Brands the first time in terms of the offer. And then I did it again, and we tied the second time. I said, let's not drive this business up any further. Let you and I do a JV, and we can move forward from there. And unfortunately, it didn't materialize at the time. But thereafter that, we got talking, and you know, they saw captive markets as a nice, if you want to call it, real estate that they weren't playing in. We had quite a nice footing in the captive market space. And they looked at us and said, you know, there might be an opportunity. They currently had a brand, a House of Coffees brand, which they were trying to reposition out of mainstream into another area, as they had the dominant Mug and Bean brand, which they were growing in mainstream retail. And they decided would be a great fit. So with their, if you want to call it, muscle and scale, and our current experience and our real estate in healthcare, it worked well.
So when did you've now sold the balance. You eventually did get down with them, you did do a deal with them. And you've subsequently sold out now.
Yes, in May 2011, we did a joint venture partnership, which was focused on primarily growing captive markets, in particular hospital coffee shops. And from May 2011 to the end of February 2015, we had great growth. And yes, at that particular point, I decided it was time for me to, you know, move on. I think I've been in that game since 2001. I've done pretty well in terms of the hospital coffee shop space, and I wanted to broaden my horizons in terms of the food industry. So I decided to sell out my shares. Famous Brands bought my equity, the balance of my equity, and yes.
So now you're free.
I'm now free.
And what are you going to do now?
Well, I'm consulting at the moment. I'm actively involved in different projects.
Food?
It is food-related businesses with Famous Brands on a lot of them. I've also got a retail smoothie brand that I've launched to market under the Juicy Lucy brand, which is a retail smoothie
no,
product.
Juicy Lucy. That's a very old brand. In fact, at one stage was a public listed company.
Correct. So I've bought the trademark and I'm trading with that particular brand in a retail smoothie type little business that we've got coming off the ground. I've also got other ventures that I do consult on. I'm at the moment consulting with Famous Brands.
Is there enough room for all of this? I mean, look, I personally own Famous Brands. It's a favorite of mine, and I say it openly. I do own their shares, or my clients certainly own their shares and that. But is it big enough? Is it big enough to let more people in?
I think there's always going to be an element of new companies wanting to enter the market. The most important part about entering a market is obviously your consumers have brand loyalty towards the brands that they've supported over the years. And we feel, or for me particularly, if I look at the competitive landscape currently in the South African food space, I would find it very difficult for a company to just come in, arrive and open up everywhere. The real estate is not, it's very limited in terms of the real estate. Consumers have become very brand loyal and brand conscious in terms of what they're receiving from particular outlets. And it's difficult to break the barrier. However, there is a move in the South African and the global context to be focusing, in particular the consumers, on global brands and global trends. So that does become a worry when you're trading in South Africa and you've got all these global brands coming in.
But what is the trend? Because you see McDonald's battling. You see people like Yum really making it difficult. They've got to change their menus. Even famous brands like, say, a famous brand like Coca-Cola, where there's this thing against sugar, and suddenly we're going to designer hamburgers. So what's the next big thing in food?
I think in terms of, if I had to be looking in terms of my future, where would I like to be going? I'd like to be going to a premium affordability. I believe food brands that have got premium affordability attached to their, if you want to call it, brand essence, I believe those have a fair shot in life based on the current economic climate of South Africa. They're resilient towards economic ups and downs, and the consumers who have the money will continue spending. And that's, for me, where I see the future of the food game.
So tell me now, because we're going to have to wrap up. It's gone a lot faster than I thought I had. What do you eat at home?
I'm a very basic eater, I must tell you. Been in the food game, you continuously you're working with food, so you actually try to stay away from food as much as possible. So basic, home-cooked meals that my wife prepares for me, I enjoy at home.
You've been on the couch with David Shapira and my guest, Brent Kairuz.